WTI at $90 a barrel, Brent at 92. We're coming off the highs of last week. Still been a monster previous quarter of a rally of 29%. When you look at the fundamentals, when you look at the technicals, is there enough muscle to keep the prices at the current levels, let alone push it sustainably into triple-digit territory?
Well, on the one hand, of course, you have a tight market, supply cuts, also inventories are low. On the other hand, it's still the overhang of the interest rates and what's going to happen to GDP growth, and that's where the tension is coming, and you can see the oil price bouncing between those two things.
I was looking through a note from Citi in the last couple of hours. Ed Morse, who you're very familiar with, he's saying oil prices are going to collapse to $70 a barrel in 2024. The surplus is going to come back, and basically you're going to have a complete turnaround in sentiment as well. Is that something you can foresee as well at this point?
I think so much depends upon economic growth, whether that happens or not. But you're going to move into a quarter where demand is going to be weaker anyway, and that's going to be weighing on the price. Whether it's going to collapse or not, you know, it's tell me what's going to happen to Chinese economic recovery.
One of the things that has been spoken about quite a bit here, both on stage and off stage, is energy policy within OPEC Plus. And Saudi Arabia has kind of taken the lead with their unilateral cuts. They've extended those to year-end to 1 million barrels per day. How worried are you that the Saudis may be over-tightening given the fragility of the global economy?
Well, I wouldn't say that I'm worried about it. I think what they've done is they want to put a floor under the price of oil, and it's been a pretty high floor. And also they wanted to bring down inventories. So, I mean, that's what they've done. You know, how long that holds for and what's going to happen next year. I mean, the big issue that's people are not talking about in the oil market is the strength of non-OPEC plus oil. The growth in the United States this year is 1 million barrels a day. Brazil, Canada. Canada is going to grow 500,000 barrels a day next year. And so it's basically is that the non-OPEC plus oil is growing faster than demand. That's the factor that goes unremarked in the discussion about oil prices.